Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are getting back on track, 2 minutes away from the end of the trading day. Romaine Bostick, Hyde, Big Tipper Taylor Riggs, counting you down to the closing bell. Here to help take us beyond the bell, our global simulcast partners, Carol Massar and Tim Stenovec, bringing together our Bloomberg Television, radio, and YouTube audiences worldwide. Carol, happy Monday.
Oh, my God, what a busy Monday. And it's going to be a busy week. I've been watching the financials today, guys. We're going to get into the industry groups in just a moment, but it is your top-performing major industry group in the S&P 500, those financials, roaring ahead of those numbers. I'm thinking, Tim, it's got to be about all of the investors thinking about maybe more money coming back to them in the form of buybacks and dividend payouts.
Yeah, certainly. We'll start to learn more details of that tomorrow morning when the big banks start to report. Talk about a rally late in the day, guys. We're seeing some, just off of all-time highs, but were reached just in the last few minutes and got our eyes on a closing record for a close today as investors do await the second quarter earnings. I think the big question, though, is going to be, are earnings supporting these lofty valuations that we've seen in the equity markets?
Meanwhile, volumes, down 13% on the S&P 500 at the moment. NASDAQ off by 11%. We're all maybe some heavy heads after celebrating, well, space tourism and Italy's win, even if I wasn't.
Were you celebrating, Caroline?
I was celebrating Richard Branson all the way. Sadly, I still celebrate my English football team. They're a young team and they're going to do amazing things.
We can celebrate a 10-year auction that is mostly lackluster at this point.
Where's that segue?
Nice. Some pretty interesting inflationary data that we got from the New York Fed. Romaine, of course, I'm brushing it aside as still some of those base effects, but nonetheless, the market continuing to say equities are the place to be if you're worried about inflation.
All right, well, for our TV audience, you see folks ringing the bell there at the NASDAQ and the NYSE. Here are the numbers, so we run you through them. The Dow Jones Industrial Average up 133 points, up about 0.4% at 35,000 even as we wait for these numbers to finally settle. The S&P 500, 4384, that's up about 15 points. The NASDAQ composite up about 31 points, up about 0.2%. And the Russell 2000, that's your relative laggard on the day. It's going to finish the day higher by about 0.1%, 2281 and change.
And let's not forget, this is going to be a crazy week. And we talked about the bank earnings. We're going to get into that a little bit later. We've got a lot of economic news. We're going to hear from Jay Powell. And you do wonder, everyone, if that he's going to say something, Taylor, specifically that could take some of the air out of the equity sales and maybe change some of the dynamics when it comes to the Treasury trade.
We're not seeing that yet, frankly, Carol. As you take a look at some of the Treasury trade, it really was the value, right? Reflationary back in vogue for our radio audience. I'm taking a look at a sector, winners and losers, and even in the losers, there's some green. Let's start at the top. It's autos up 3.25%. Banks up 1.5%. You're getting the likes of media as well. Disney crushes it over the weekend. They're up about 1% here. And then we go down to the laggards, and it really is this rotation sort of out of technology into value as tech, hardware, services, and some of the software and services are off anywhere from 1/4% to 1/2%. So you're really seeing perhaps underneath the surface a little bit of that value trade as well.
All right, and just want to mention a headline crossing, an official saying the European Central Bank may use tools to reinvest in excessive dividends. So we continue to get more from the central banks around the world when it comes to what they are doing. Let's get to the gainers. Yeah, exactly. So let's get to the gainers. We talked about it, the big banks reporting. They are trading higher ahead of that, 2.4% higher on Goldman Sachs, but you saw higher trades in JP Morgan, also in Citi and Bank of America. Got to mention Liberty Mutual to buy State Auto for $2.29 billion in cash. Well, you saw State Auto up 190% in today's session.
This was crazy, Carol. I mean, the premium that they're paying over the close on Friday.
Thank you, Romaine.
Huh?
Thank you for saying that.
Yeah,
it's mind-blowing.
Carol has no comment.
No, it's crazy. It's off the charts. It's spacey. It's out in space, which we're going to talk about a little bit later. Got to mention Tesla because a lot of headlines. Elon Musk was in court today about the Solar City acquisition. Tesla was still up about 4.4%. Elon apparently doesn't want to be CEO or boss. Check it out at Bloomberg.com. There's a lot of headlines there, Tim.
Yeah.
No, I know.
I feel like it pays well.
It does.
Yeah, it does.
So
Well, Carol, you got the gainers. I got the decliners. Let's start with Johnson & Johnson. Shares off of their session lows reached earlier in the day, finishing the day down just shy of 0.2%. We've covered this all afternoon. The Washington Post reported the FDA set to announce a new warning for J&J's COVID vaccine. Space, SPCE, Virgin Galactic, down more than 17%. It's the most in a single day place since December 14th. So a successful launch doesn't necessarily mean a successful day today. Of course, the company saying that it was had filed to sell as much as $500 million worth of shares. They said in the filing today. So taking advantage of the fact that going into the launch, shares had more than doubled. Caroline.
So Mark, we're talking, of course, all things Black Widow there. Meanwhile, we're talking all things King Dollar. On the day, up about 0.1%. I'm going cross-asset. I'm looking at the FX market. The dollar was in a strong position today, up 0.1%, ahead of key inflation data and head, of course, Chair Powell later in the week. But also, as we see, perhaps a slightly different variation in terms of world central banks. The ECB, Lagarde, giving that exclusive conversation to Francine Lacqua, talking about more stimulus coming in the next 10 days, perhaps. More focus, therefore, on a dovish central bank and hawkishness here in the United States. We therefore see the Kiwi, the New Zealand dollar down. That as commodities sold off. Overall, we saw oil down by 0.5% as we saw dollar stronger. Oil goes lower. So too does it go lower as we worry about variants. Remember, Sydney seeing a big uptick in numbers when it comes to COVID-19. We're also seeing the UK it not looking pretty over there either. I'm looking at zinc down. We saw Dr. Copper come down as well in the face of strong dollar and worries about the overall growth story. But we had a mixed picture when it came to, well, world bonds. We see a very, Italian yields falling, is Aussie dollar, also money moving into Australian debt. That, of course, amid the concerns of COVID-19.
And you're seeing some price down, yield higher, at least when it comes to U.S. full faith and credit, pretty much across the board, trying to get a gain of anywhere from unch to, well, maybe 1 basis point or so. And we're seeing higher inflationary data from the New York Fed today. And really, well, these higher yields, Carol, have been a big kicking off point for some of the financials, given some of the latest underperformance value. And that leads us right into pushing forward, right, and looking at some of the bank earnings that we're really going to be expecting this week. Interesting comments from Dan Pinto a week ago of JP Morgan saying that he thinks that the trading slump is over, and yet other firms are saying that M&A might be the way to save the day.
Well, it's really interesting when we look at these big financials, and we mentioned the ECB headline looking at using tools to rein in excessive dividends. And we know that's been one of the big stories that we've talked about with the big banks, right? When they passed their stress test, they had a lot of money to give back to investors, and that has provided some momentum for that sector in particular. But what happens to trading? We know trading during the pandemic just took off as a lot of people were home. There was volatility in the markets, Romaine, right? But what happens to trading, and what impact will that have ultimately on the big bank's bottom line?
Yeah, and it'll be interesting. Obviously, the numbers year over year are going to be a little bit distorted. I mean, you're talking basically triple-digit growth here for some of those earnings numbers. And of course, though, that will trend down as we get into the second half of the year and we start to see those reports. So I guess the question is, how do these banks hold up? But I just point out, I feel like these banks sort of always get kicked around, but most of them have held up pretty well here when you go back post-financial crisis here, despite the fact that maybe some of the more traditional valuations, the one that they have in all those fancy CFA textbooks that Taylor buys. And at the end of the day, they've managed to outperform, at least in terms of their earnings and their revenue performance.
They certainly have. And tomorrow, it's not just about the banks. It's not just about the companies that are reporting earnings. It's about what the banks have to say about the economy. We just spoke to Brian Jacobson at Wells Fargo Asset Management, and he reminded us that, hey, these are the companies that have their boots on the ground when it comes to just understanding what is happening in the U.S. economy right now. He wants to hear about small business loan origination, and hearing about demand coming from small businesses to see if they are borrowing money to actually expand and grow their businesses.
Well, meanwhile, we see whether we're going to be factoring not into the bank's earnings, but certainly into the rest of the earnings situation. We've got PepsiCo later, of course, tomorrow. Some of these companies that might see supply chain inflation. We've got inflation data coming tomorrow as well. That's all going to weave into this narrative of, are we at peak inflation, or how much of this is friction, growing pains, or actually a longer-term trend, Taylor?
I'm really excited to hear any commentary that they have about passing on any of that inflation to the consumer. And then this theme that we continue to see not only around CPI and PPI, Carol, but, well, the pivot to health food as well. So certainly something within the retail space that we're watching, but the main story indeed, some of those inflationary trends.
Yeah, watching all those. Don't forget, we've got a lot of economic numbers coming our way this week too, so we're going to kind of layer that on top of it. Got to add on though, just to end up, Tim, what were you doing yesterday?
Oh, I was watching Virgin Galactic succeed at going more than 50 miles above Richard Branson, a successful mission for Virgin Galactic. What did you think? Are you guys ready to go?
Yeah, England won something yesterday, so I'm pleased that it was the space race.
You're still talking. Still talking football.
Yeah, well, no, we didn't win football, but
I
we did
know.
win on the space race at least. So I know there's much quibbling as to whether this was. What was the shade being thrown? That it was just an aircraft,
High altitude
aircraft.
airplane.
That's some aircraft.
He's going above the Kármán line. Was it next Tuesday? It's my birthday, by
9
the way.
a.m.
You can send your cards here to TaylorRiggs.com.
All right. Ordering flowers
this was
as
a big
we
deal, and we all did watch it on Sunday. And I mean, it was a lot more fascinating than I thought it was going to be.
Yep, space tourism, it is off and running. All right, that's going to do it for our cross-platform coverage. I would go.
That's quick.
That's going to do it for our cross-platform coverage here on Bloomberg Radio, Bloomberg TV, and on YouTube. We'll see you again on Tuesday, same time, same place, everyone.